Well, this year the markets have been particularly volatile, making it a rocky ride for a lot of investors. And in times like these, it can be hard to know what to do and keep your emotions in check and try to avoid some common investing pitfalls, which is why we have our financial expert, Robyn Thompson, joining us with some tips this morning. Good morning to you.
Good morning, Anne-Marie.
Nice to see you. It's, I haven't seen you in studio for a while, but good to see you from home.
It's been a little while.
Well, first step you say is to avoid panic selling. Keep your emotions aside while you're investing. Why is this so important?
When you're looking at markets right now, especially ones that are rising and falling the way that they are, it's easy to get caught up in that whipsaw of the market and have some pressure around what you should be holding and why you should be holding it. And when you're selling on emotion, you're likely making not the best financial decisions because you're allowing the emotions to take over sort of the rational part of the conversation around why you're holding what you're holding. So it's important to take a look at your investment portfolio, understand what you're holding, and why? Why would you want to sell an investment right now? Has there been a fundamental change in the outlook of the company, either in cash or revenue or forecast? And have a really good understanding of why you're making that decision before you make the decision. Because again, generally when you're making decisions based on emotion, especially as it relates to the market, full of fear and greed and drama, it's likely not the best time to make a wholesale decision in your portfolio.
Having an inaccurate view of risk tolerance can also lead to panic selling. So how can we tackle that?
Well, a couple of things. First, I would say it's important to understand that risk tolerance can also be seen as loss tolerance. So sometimes it's about understanding what that percentage means. So when you're looking at your portfolio, and again, you're seeing it rise and fall, and throughout last year, especially in February and March, we saw the markets fall quite dramatically, between 20 and 30%, 32% in some cases. And if you had an aggressive portfolio and you were over allocated towards equity, you may have seen your portfolio drop. If you had a $100,000 portfolio and it dropped by $30,000, how does that feel? How does that help you sleep at night? So it's important to really understand, is the loss tolerance the same as my risk tolerance? And do I have the ability to manage some of those market movements that happen as the market continues to go through its advances and corrections? So get a clear understanding of what your goals and objectives are, allocate your resources accordingly, but be clear on what you're willing to put on the line.
Yeah, good advice. Know what your loss tolerance is. Predicting market timing is a favorite pastime for a lot of investors, but I mean, even doubly more difficult in times like these. What do people need to keep in mind?
They need to keep in mind that this is, no one has a crystal ball, Anne-Marie, and this is no joke. It's not a game. This is your money. It's your investments. And sometimes people get caught up in the, I should have bought this at this point, or I should have sold at this point, or I didn't catch the top, or I didn't catch the bottom, and I want to make a return. And when you get into that cycle, you started to get into a bit of comparisonitis where you're trying to figure out, well, I should have got here, or I should have got there. And really it's about understanding, again, what that balance is of your portfolio. Make sure that you're making the decisions that are going to stick with you over the longer term, and try not to get caught up in the daily market noise of what you're buying and selling on a regular basis. You need to identify that pattern or define the goals that you have in your portfolio and stick to it over the long term, and try to understand that, no one has that crystal ball. So to catch the market at the top and the bottom, you have to do two things right. You have to get in at the right time. You have to get out at the right time. So, it's very complicated to do successfully time over time.
I love that. Don't get caught up in the comparisonitis. Robyn Thompson, great to talk to you. Great tips this morning. Thank you.
It's nice to see you. Take care.
You too. Thanks for watching. If you like this, be sure to subscribe here.
And you can check out more Your Morning videos right here.